What's up guys, and welcome to another video on my channel. In this video I would like to show you a highly profitable scalping strategy where you only need one indicator in 3 different ways, so it's very easy to set up and it's the ideal indicator for scalping in the 1 minute time frame for all forex indices, crypto, whatever. And as you guys know, we will test it on the euro US dollar in the 1 minute time frame. And I would say we will start with the setup and let's go. So the setup for this strategy is very simple. All we need are 3 different EMAs. So we just type in the indicator section EMA. We need the moving average exponential and this in 3 times. So 1, 2, and 3. We click 3 times on to this one. And now we have to do some changes. So we go to the first EMA, click on, and then we go on inputs. The length we are setting to 32 and the style is in white and on the thickness in that one or that one. So I prefer the second thickness and let's click OK. For the third one, for the second EMA, we do the same, but this time we make this in green, the same thickness. On the inputs we are going to 32 as well, and the source will be in low. Click on OK, and we do the same with the third indicator. So here the same length, 32 as at the other two. The source here will be on high, the style as well in green, and the same thickness as the other two. And that is already the setup. So as you guys can see, it is pretty simple, pretty straightforward. And I would say let's dive now deep into the strategy. So let's start with the entering rules for a short trade. The first important rule is that we have to be below the EMAs, that the market has to be below. So like it is in this area over here. Then we want to look for the opportunities where the market comes back in between the EMAs, like over here. So we are on a bearish way, the price is moving down, the price comes back right into that one. But as we are not closing really into the zone over here, we will wait until it happens again. So like here. This is the moment over here where we open the short trade as the price, or as this candle is the first red candle closing below the green EMA line. The stop loss will be right above the lowest or above the recent high, and the risk reward ratio will be 1 to 1.5. So we set that up over here, and this is the moment where we will get our take profit. So let's go and write this one down. So for a short trade, we want first market below EMA. Second, market comes back in the EMA area. The third one is that a red candle closes below the green EMA. This are our entering rules. The stop loss is right above the recent high, and the risk reward ratio is 1 to 1.5. So these are the rules for a short trade. The rules for a long trade are more or less the same, but in the opposite direction. So here are the rules more or less the same. So for a long trade, we are looking first, the market has to be above the has to be above the EMA. Then as the second, the market comes back to the EMA. As the third one, we are looking for green candle closing above the green EMA. The stop loss will be right below the recent low, and the take profit is at a risk reward ratio of 1 to 1.5. So these are the rules for long trade, and we have a very good example over here. As you can see, guys, we are coming from a bearish market, moving now, crossing the EMAs above. The market is coming back. This would already be a long trade. So right here, we are doing the same. Or right here, we are entering the market long, put our risk reward ratio to 1 to 1.5, and the stop loss is just below the recent low. This is our first trading opportunity here, and we have a second one right over here a few minutes later. As you can see, we are hitting this area, even though the candle doesn't close here. We get a green candle, so we enter the market here, put our stop loss right below that level, and put our take profit at 1.5%. So here, guys, you can see we have two very good examples for a long trade. And now, guys, I would say we start with the backtest of our strategy. Again, I will do 100 trades. We will see how long it will take, and I'm very looking forward to see the results. So let's go. Alright guys, as you can see, we have now finished our backtest. The result is looking very, very good. So as you can see, we have done 100 trades. For the 100 trades, we needed approximately 4 days. In this 4 days, we have managed to get 453% of a win. So let's imagine we are doing every week 400%. That is quite a bit of money, and it's very exponential. So I would say the strategy is very, very profitable, and I would like now to know what is your opinion about the strategy. If you want, please test the strategy out by yourself, but the most important, first do it with some paper money, and then if you are getting the same results as I do over here and also in a longer time frame, then you can start to choose or to change to the real market. I hope you liked and enjoyed the video. I wish you all the best now, and yeah, I think we will see us back tomorrow in the next video when we are going to test another strategy. So see you then and stay tuned.